Mr. Kamal Sharma, Managing Director and Vice Chairman Designate with Lupin. Mr. Sharma, good morning. Thank you for joining us. Mr. Sharma, the Chairman of Lupin in the annual report has indicated that the company is looking at $5 billion sales by 2018. You are currently at $1.7 billion as of FY13, which means you're targeting that Lupin could multiply the sales by about 3 times in the next 5 years. That's a big call. So what is the strategy in place here?
Yeah, so there's a few things that I would like to say there. That whenever the chairman articulates a particular vision for the company, that sets the direction for lots of actions and a lot of planning and execution that we undertake in the course of reaching that milestone. But I think what everyone must appreciate that these are aspirational targets that we set for ourselves, and it helps us to kind of mobilize the spirit of the organization towards that large goal. Not to say that we say it in any lack of seriousness. I think it's a very serious pursuit that we would make, but the point that I just want to draw your attention to, that if $5 billion was not happening in 2018 but happened in 19, that no love will be lost. So that's one point that I want to make clear at the outset. The other is that the track record of the company, the way we have organized the internal ecosystem, we should be able to grow our business at 20 to 25%, anything between the two numbers organically, and this is based on the confidence that I am sharing with you is based on the pipeline of submissions we have for United States, the therapy groups that we are planning to enter into, the new ones, our plan for some more geographic expansion that we have yet not accomplished. And some of the value-added business that we have been planning, which I keep talking about, the specialty business in the next 3 to 5 years. So based on these engines, this entire growth of 20-25% is planned. We believe that we will need to do some inorganic, we'll have to undertake some inorganic options to reach the target that the chairman has articulated, and we are in fact looking at evaluating some of those areas also in the meanwhile, and you will get to hear them.
So, Mr. Sharma, how do you see growth in the U.S. market going ahead now, as the annual report indicates that the business mix is now increasingly tilting towards the developed market?
Okay, a very crisp answer to your question would be that the ratio of international business to domestic business would be in this range of 70-30, 68-32. Anything between 65 to 70% should be our international business. The reason for that is that with whatever you may do, at the end of the day, when you say the world market is 1.1 trillion, the India market is just about 25 billion or 30 billion. So you have a very large piece of the denominator lying outside the country. So for any company which would like to grow at the pace that we are envisaging, it's but natural that the proportions would be in favor of international business.
Just to take a detour, HUL today is the top traded counter on both the exchanges. So it has traded more than Unitech, more than JP Associates, more than Apollo Tyres, and more than Arcom. This is sheer momentum of what? It's quite extraordinary to see such high volumes in HUL also. 30 minutes into trade, and volumes only on National Stock Exchange are about 3.7 million shares. That's extraordinary. Look at the volume. That is telling you some story. I just quickly want to run through the banking index as well, because the banking index has to stabilize if markets have to stabilize. No, banking index has not stabilized. IndusInd Bank and Yes Bank are the only two banks which are looking okay. So the bank nifty is under intense pressure. It is now down about 700 points in a matter of just 3 trading sessions. Mr. Sharma, sorry for the detour, Well, last time when we interacted with you, you had indicated that you were rather looking at brands in US and LATAM, and you were also open to some kind of a technology platform acquisition. Any updates on the same, or because of weakness in rupee, all global acquisitions are now likely to be on back burner?
Let me say this way that depreciation in currency does put a certain amount of extra pressure because you have to pay more for your assets that you buy. But I would say that does not become the determining factor in pursuing a particular strategy that we have. And you will very soon get to hear some of the collaborations that we have done for India and some of the products that we are going to have in our brands. And the process goes on because the kind of growth we have set for ourselves, the target, is not going to be achieved unless we are in a perpetual mode of thinking new, thinking fresh, and creating the right differentiation. So all the three areas that you just mentioned, that is the acquisition in Latin America, brand acquisition in United States, and platform technologies. I think all three are in the pot, and you will get to hear in due course of time.
So with the currency moving the way it is, what's the hedging strategy that the company is looking at in FY14?
We have a very kind of a plain vanilla strategy. I think we do certain amount of forward covers, and we obviously that also is done in a progressive way. So we leave a lot uncovered for, and typically we have a 18-month kind of window at which we look, and the later part we leave a lot uncovered. So this is how we play, and the idea is, I can just say plain and simple, is not to make money on it. I think it's just to make sure that our commitments are delivered, and that's the only thing we accomplish.
Right. The Sharma markets also want some clarity on Yasmin and Yaz launch. What is the plan there?
Well, that you will get to hear. I cannot speak at the moment because there have been some IP issues on that. So we're in the process. So once that is clear, then you'll get to hear them.
And how do you see the free cash flow movement in FY14 for the company?
See, I think as far as Lupin's balance sheet is concerned, you would know that our debt equity is now about 0.12 or 0.13, and our profit generation has been handsome over time. Very clearly, after paying the dividends and investing about $100 million plus in capital expenditure, and also funding the differential working capital for increased business size, we're still able to have surplus in our balance sheet. So I don't see anything happening which would change that situation. The company would continue to remain a very healthy company.
Right. Finally, Mr. Sharma, if you could share with us, can you share the update on key molecules like Tricor and Tripix? What is the performance there, and what we should expect to hear on that front?
Yeah, so I think there is, after launch by Mylan, there is certain hashing of the market shares. We still are holding on to our market share pretty well. And Trilipix, I think we have not yet launched. So when we launch it, you will get to see the effect in the market.